investors. The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Daryl Martin.
Welcome, folks. You get Tom O'Brien, Daryl Martin, and Tom O'Brien. It's a beautiful thing. We're growling and prowling out here. Dow Industrials right now are up. Just happened. Dow is up 262. You get the Nasdaq up 58. S&Ps are up 25. And folks, if you haven't test drove the Nadex platform yet, it couldn't be a better day. This is a gift from the trading gods, flat out. Come over to our website at TFNN. You're gonna see the banner on the top, on the side. Hit that banner, bring it up. They'll put $25,000 of paper money into it. We will walk you through these contracts. Our man, Mr. Daryl Martin, has an outstanding show every Tuesday, Thursday, 1 to 2 Eastern Standard Time. Of course, we do the show on Friday mornings. And Daryl Martin, what's going on?
How's it going, man?
Hey, we're out here growling and prowling, man.
Yeah. So I had a little NFP movement, or not near as much as a lot of people thought was going to be out there today, right? So...
this spike, to me, this spike is a gift from the trading gods in an incredible way.
You got to take advantage of the spikes.
Yeah. And you know, if you're bringing this up, folks, okay, once you get the platform up, bottom line, Daryl has a scanner that you can test drive. 30 days, absolutely free. Check it out. The scanner, of course, is not going to tell you where to go long or short. What the scanner is going to do is give you the best contract that is available for the strategy that you have. So, Daryl, we got my son Tom here.
What's happening, Daryl?
What's going on, Tommy?
What's happening? Good talking to you, man.
Y'all going to be out in Vegas next week for the money show?
My dad's going to be there. He's going to be growling and prowling. I know.
Tom's going to be doing the show right here.
Yeah. Seriously, right?
Totally. Yeah. No doubt.
I go to Vegas. You have a good time. I'll see you later.
Yeah, right?
I'm even taking my 8-year-old daughter. I mean, come on now.
Perfect.
That's
good.
good.
We're going to go see the Grand Canyon.
Nice.
We're going to go a couple of magic shows. And
Yeah, go see a show. There's so much.
She wants to see O. She thinks that looks really cool.
You went to O, didn't you?
Yeah. That was amazing, man. That's an amazing show.
And for the first time, I'm staying at Circus Circus.
Oh,
That's awesome, man. That's great. Totally.
So it'll be a fun time though. So
no
cool.
doubt. So let's talk about these. Well, if we can, I think we should do first here. Let's talk about these markets first, because we want to go over. You have those screenshots? Do you have these screenshots?
We can go over that later.
Okay. So if we take a look at this market right now, folks, okay, what you have is this. We have the E-minis, okay? They're up at 2109. If I put these on an intraday basis, you're going to see that the last spike, okay, bottom line was right at the open. Huge contracts, no doubt. And what you also had simultaneously is this. And this doesn't happen. It happens, folks, but it's so often that it's a mind blower, okay? So at the open today, what you had is that you had huge amount of buyers in the marketplace, and you had a tick that went out at 1509. Now, it's really hard to get a tick at 1509. What that simultaneously means is this, is that it means that there's approximately 3,500 stocks in the Dow Industrials, in the New York Stock Exchange, rather, that trade. You have more than that, but a lot of those are bond funds, okay, that are inside it, about 5,000. What that means is that traders, funds, were on the bidding it up simultaneously at the exact same second. When you take a look at this tick index, when it gets blown out like this, it's a fast indication that we have lower prices coming at us, and coming at us pretty quickly. And when you take a look at this, I got this up on a daily basis now. Let me see how far I'll put this on 1 year, because I just want to show you something, just so you can, and it doesn't mean this happens every time, but I just want you to gauge this out so you can see how this works. you start pulling this back, and the monster, you know, if we go back, well, that's October 8th, that's the 14th. When we take a look at this, what you're going to see is that when you have that much buying that comes in, the expansion on the way down gets pretty dramatic. When you take that together, and now watch this. This gets really bizarre, because this is really unusual when this happens. Okay, so right now what you're looking at, if you look at a trend index, the trend is saying it's 1.41. Now, with a market that's this high, that should be down at like 5.7 or 7.0. And it's just the opposite. So what this means is that underlying this market right now, you have larger operators. When it's one, it means that all the stocks are getting the same buying and selling. That's what this indicates, okay? When it goes over one, it means that certain stocks are getting more selling. When it goes under one, it means certain stocks are getting more buying, okay? You don't see a 1.41 in a market that's up $200, okay? So what that is that is the unloading of the same amount of stocks by large companies. That's what it is. Okay, so now we get that. Okay, so now what do we want to do? Well, my bear rug is out, so.
That's good, hey? That's all right.
So, since my bear rug's out.
It's nice to be out right now and not last night, though, right?
Totally. Well, you know what's so crazy? What's so crazy about this?
Timing is everything.
Yeah.
No, and you know, Daryl, you know, what's so crazy is that I just felt that this jobs number, whatever it was just like, man, this market wants to spike into this jobs number.
You said that in the newsletter.
Yeah, it was just crazy.
Yeah.
I know, it's just deviant. It
said it'll be a good jobs number, it'll spike, and then we'll short it.
You're right, and it'll sell right into it, okay? So that's what we did, number one. And we're going to set this up right now because, so where you're at is this. We're at 2109. So the key is now finding a trade. You already have a trade on, right? You have
I
a
have
binary.
one binary on.
Yeah, he has one binary on right now.
It's pretty good. I got it at like 9:45. But this, you know, it's just finally went high enough. I said,
right.
I'm just gonna look for a pullback. I think I can pull it up. It's like 70 Dow points underneath where we are, getting like 2 to 1, 3 to 1.
That's it. 70 Dow points. Okay, so let's look at that first. Okay. So Darryl, where are you at right now? Oh, look at this. That's the Dow. That's interesting, man.
I just did a neutral play on every currency.
Yeah, that's nice. No,
I mean, implied volatility was inflated through the roof.
Yeah.
Okay, because NFP was coming out, and you know, I go through all the stats on every news report.
Okay.
And so yesterday I was doing these off the end of my show. I was like, hey, here, you know, and I do this for every NFP, and I update the stats occasionally, as needed. But I basically said that the Aussie dollar is going to stay within 60 pips. Your dollar is going to stay within 100.
Okay.
Pound 100, dollar CAD 75, dollar franc 92, dollar yen 80. And I said by the time it closes, it'll be less than a 50 pip move, pretty much across, like 60 to 50 pip move or less across the board. And I mean, that's exactly what's happening. So they popped up, popped down, and then just going right back up into that category. And I have, you know, a while to let that premium burn out, but you could have got way more premium than that. And just very, very simple, very neutral play.
Are you trading spreads like that?
Yeah.
Yeah.
Yeah, you do spreads. You can also do butterflies like it, but I like spreads a lot better on the neutral plays, just because like if it goes one tick against your strike at the end, you don't lose everything, right? You
Right.
You know, it's $1 difference.
Right. No, I know those binaries, man. I had a trade. I was telling my dad I had a trade on Tuesday, and it was a short binary in the Dow, and I did one of the ones that was an 11 a.m. And because of the volatility, of course, in the beginning of the market, and literally, if you look at the Dow chart at 11 o'clock
right
on Tuesday, Daryl, it was 3 seconds. 3 seconds was all it took at 11, because Nadex has second-by-second charts you can pull up. And literally, the bar ended at 10:55, looking at a 5-minute, and immediately it spiked down. And I was only 5 Dow points away from my binary expiring in the money anyway. And 3 seconds later, the Dow had moved the 10 points I needed. So I hear you.
There you go. So, but it moved in your favor on that one, so that's good.
No, it did,
No,
and I had the right call, but it was 11 o'clock. Now, what's funny was, and
but
I'll
it's
show
3 seconds late.
Like by the skin of your teeth.
Yeah.
Yeah. Now I was happy because I knew the market direction was right. I was just off by 3 seconds, you know. But that's you don't get 3 to 1, 4 to 1. if you have forever to make that money. You get it because you have the 2 hours, but the next day I'm going to walk. I did a trade Wednesday, and what did I do? I decided to do it for the day because I was not happy with 11 o'clock in the morning.
Right.
That worked out well. So.
So right now, see, we get this pullback happening right now. It's going to be, as Jay's just said in the den, the 2108 basically is in the money already. So the S&Ps, folks, okay, when you take a look at this S&P, my take on this is going to be really interesting because, see, if you look at the daily or the weekly, well, first off, we're at 2107 on the S&P. The high that was out there that was generated was 2111.75 on the 5th. It didn't make it. It couldn't make it. Now, that should have made it in a heartbeat. The reason being is that was at 4:30 in the morning. There's no reason that you couldn't spike that level. So what does it say? Well, it says you couldn't get to the swing point, number one. Now the real the kick is going to be, do you get back inside the 2106.25? And all I'm doing there, I just take the last time with volume up.
Sure.
Right? And if you get back inside that level, this is what's wild about this, folks. The measurement goes like this. If you get back inside the level, well, then you go to the bottom of the level. Okay? So if you get inside 0625, you're going to go to 03. And then, of course, you can just measure the volume characteristic out of that and say, are we coming down with that with force, or are you just basically backing up and building strength for the next level? So you stay right there. I'm Mr. Darryl Martin, Tom O'Brien, and Tom O'Brien. We're going to be right back. We're going to set a couple trades up, folks. There you go. It's a beautiful thing. Whack away at them, baby. Sell them. Sell them. Sell them. Dow's up 235. Nasdaq's up 56. S&Ps are up 23. We're going to be right back, folks.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host of TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Daryl Martin, Tom O'Brien. Tom O'Brien, appreciate you growling and prowling with us out here. We have the Dow up 240, Nasdaq's up 56, S&Ps are up 24 with 2108.50. We have gold up 350 and silver's up 9 cents. We're talking about the Nadex platform, folks, how you can trade it. Remember, it's a defined risk trade, which is really pretty cool. You can test drive it by coming over to our website at TFNN. And
now,
so, go
I want
ahead.
to bring up something for you because this is going to be great news for you, okay?
Yeah.
You love trading the NASDAQ, right?
Yes.
And I've been fighting with Nadex over this for like 2 years, okay? And you know how, like, remember when I first came on, I taught you, like, hey, avoid the Tech 100 spreads.
That's right, because
the
the tick value, yes.
Mm-hmm. Well, they listened, and they fixed it.
Sweet.
They tick in 0.1 now.
Sweet.
And their bid offer is 0.1 or 0.2, meaning they have a bid offer spread tighter than the actual CME NASDAQ futures.
That's about as good as you can get, man.
Yeah.
Seriously.
And two of them, just two spreads equals one future.
Okay.
Because basically if they're $1 a tick,
Yep.
and it ticks in dimes, okay? 10 dimes and $1, right? So a 1 point move or $1 move there is going to equal $10. Since NASDAQ equals $20 in a dollar move, it only takes two spreads now to equal one future.
It's pretty cool.
And so if you want to get a tighter bid offer spread than you get on trading on CME, and if you want to have defined risk in that process, there you go.
It's
pretty
huge.
cool.
And the NASDAQ, folks, okay, a tick in the NASDAQ is not like a tick in the S&P.
Yeah.
The NASDAQ ticks at 5, like, boom, like in about 2 seconds.
No, and those spreads, I like what you're saying, Daryl. I was telling my dad earlier, too, the spreads were so nice. You're really not paying a bid offer premium at all on a lot of them. You're so tight to the market. Some of the binaries, of course, you know, where you're making those high probability or low probability bets, you're paying a little bit of a premium just because the market isn't as tight.
And they can move more, you know?
Yeah.
So, and faster. You know, binaries, obviously, I mean, it's a delta.
No,
so
we'll go over. I had a great trade Wednesday, and I was just watching it, and I wanted to have something to talk about, thinking I'd come back on Friday. And that's what's so hard to understand is where the bid and the offer and how it reacts to those binaries. And that's what I was telling my dad. You can get in at like a 3-to-1. And if it gets to your execution, if it gets to that price point of it, you're only getting back to the 50-50 mark, you know, but if it ticks one tick over, you get 100. So seeing how that bid and the offer really reacts as the market moves so fast on a binary, it's a lot of information there. It's kind of tough to grasp until you really watch them and how they move. The spreads, of course, just react with the market, like you're saying.
And what we're going to have for you, folks, is that at the bottom of the hour, Tom actually took screenshots of all of that when You were trading it.
Yeah.
So we have the screenshots so we can show you and walk you through how that works.
Nice.
Because, well, you know, Tommy just brought up a great point, and this is really important too. If you're getting into a binary, right, with a 3-to-1, right?
Sure. Something like that, yeah.
You know, you're really making that decision to get into binary, to get the binary, not to close that before the close, right?
It's tough. What I was saying, Daryl, is like I'll take a binary of like 70 points out on the Dow, and so you're paying a premium. You're getting maybe 3-to-1. But if I get that 70-point move and I'm right at my price point, then I've only maybe gotten from a $30 investment up to like 50. So I haven't even doubled my money yet, and I've gotten kind of the move. So do you have the conviction to maybe believe in what you thought originally and let it go and try and get that 100? Or, you know, and you're following the market, but it's just there's such a big difference move on those binaries. And that's why, you know, I lost by 3 seconds, but that was on Tuesday. The next day I came back and the same thing. I'll show the market. I had it by like 120 points. I was in the money after being, you know, 70 points out. And then the thing came almost all the way back and I hadn't closed it. And I just let it run anyway. And then I ended up closing it out once I basically got 95 cents on the dollar.
So yeah, that's one of the big things is you're going to want to close them before, because you had a conviction of, hey, I think it's going to this price, right?
Or past it, really, right?
Right, but I mean, like you have like your first, like, you know, magnet level or whatever it is,
right,
level
right.
or, you know, whatever.
Right.
And then, you know, hey, it could go beyond that, but you're like, I'm confident. You know, obviously your percentage of confidence goes down on additional, you know, hopeful levels. But you have like, it's going here.
Right.
Okay. It may go to this level also.
Right.
And so what you want to do with that binary is, you know, you want to go, you know what? I want to go ahead and take profit like when it hits my strike. And so I'll often use the strike I'm targeting, and I'll exit when it hits it.
Really? Okay.
And what that does for me is a binary is literally like a delta of an option. Okay. Right. And we'll talk about when we get back after this break.
No, absolutely.
Talk about how to do that.
Dow right now, folks, is up 247. Nasdaq's up 58. S&Ps are up 24. Gold's up 270. Silver's up 6 cents. We're going to be right back, folks.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe future economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Tom O'Brien, Darryl Martin. Tom O'Brien, appreciate you growling and prowling with us out here. The Dow right now is up 252. You get the Nasdaq up 56. S&Ps are up 23. And when we take a look at this S&P just for a second, folks, okay, let's just see where we stand right now, because what we're going to do is that we're going to walk through a couple trades, live trades that were done by Tommy on Wednesday. And simultaneously, you know, it's pretty cool here, Darryl, is he screenshot them the whole time that he was in the trade. So we were just talking about, well, here, why don't you walk?
Yeah. So, Darryl, what I was saying is that, like before, it's just so hard to understand how the bid and the offer move on the binaries. That was the one thing that the binaries were so exciting getting into it, but getting a grasp of, like you were saying, how those bid and the offers move in relation to as it approaches those strike points. I just thought that was the most informative thing that I could kind of capture and go over for sure. So the chart we have up here now, Al, if you can go to this, is, so this is Wednesday, May 6th. So this is as we're coming into the market at like 9:15 in the morning. Now you can see overnight we're as low as 17,840. We had spiked up 3-4 in the morning. We're at 17,920. So realistically, I was just going to make a play that at some point during the day that we can come back and test some of these levels. Where we're coming down here, whether we're testing this spike, it's being bearish overall, you know, and approaching the market with that type of bearish attitude.
You must have the same kind of furniture as I have.
It's tough to get out of that mindset working here, right? Okay, so we see the market. So what I had put on is I have one spread, Darryl. The Dow was trading the futures contract, the June that Nadex is trading off of, is 17,920. And I went into the 17,500 to 17,900 spread. Now, I paid $34.
Okay.
And, you know, that's a 400-point spread. So you're putting up $34 with a potential profit, though, if I'm paying 34 of 366.
Right.
So I'm looking for a big move, but, you know, with that, I'm paying a 50 Dow point premium about on that. You know, I'm paying 54 points. If it doesn't move 54 points, if it doesn't move anything, I lose everything. And then I put some binaries on.
You don't lose everything. You don't lose everything. You lose a premium on it.
Well, I would lose everything right here only because I'm completely out of the spread, where I'm at 17,920.
Okay, yeah.
You know, that's all. But I am. I'm paying 50 Dow point premium, but with the volatility, and that's the other thing I was saying, is if you get days where the spreads move the entire volume of the spread, 400 points, then that's great. And like today, it's 250 points. You're almost getting full moves of a 400-point spread, so you don't have to be off and right.
Yesterday the market moved 360 points.
Yeah.
Right.
And then Wednesday was a big day. It pulled back. It kind of got some gains back after being down a lot.
When you watch this setup, folks, this is wild.
So I have one spread on. I have 5 binaries on. You can see the numbers down here. The position value, it's about $160 I have on so far. And then, so we'll go, that's 915. Now here's 940. So we jump right quick. Now, what I had done in that time is that as the market started to spike here, I had the trades on, but I decided to put a couple more trades on. It just got to a point where, and I wish I had screenshots even better of these, but I added one more spread because I could get a better price.
Yeah.
So really, I have my spreads in at about $30 for the 2.
Okay.
Risking 30 to make 370.
Right.
And my binaries, I'm in at 73.56. Now I'm selling these, so I'm putting up $26 essentially for each binary, and I'm investing that they're going to go 17,860.
So if you're in your car, folks, what the binary is saying is that you want to close into 17,860, right?
That's right.
Okay, cool.
I'm essentially
at or below.
At or below.
Yeah.
I'm selling, that's because it's a greater than, right?
Right.
So, with this bar, we had a huge volume right off the bat, huge acceleration. Now, what I wanted to keep showing, like I talked about, the bid and the offer. So I got into these at 73. With a huge move like that, I'm still out of the money. I'm still 20 points.
You sold them at 73.
I sold them at 73.
Right.
I'm still 20 points out of the money. These would expire worthless right now.
Right.
And that's what's tough about the binaries. I'm looking for a huge move. I get almost a 100-point move in 5 minutes on the Dow, and my contracts are still worthless at this point. But that's why you're getting 3 to 1. And that's, So you go 942. 943. Now these are moving so quick. 13 minutes in the market. Now,
so the time is at the very top when you're looking at this. The screenshot, folks. It's 9:43 a.m.
Now, when I had gotten into it, I sold it at 73, and right away it's already to where the bid offer is 37 by 43. So I could buy those back at 43 right now. And so, Daryl, is this where you would be taking some of your money right now, as for sure as it's crossing that point?
Yes.
Yeah.
Yes.
Okay.
So because basically here's what is a binary, like I said, is a delta of a call option. Okay? Like if we open right now, and I'll bring this up here in a minute, but if we open up right now and we look at our weekly binaries, because when people see this, it's like, oh, wow, that makes sense.
Okay.
So as I'm getting this chart open to look through it all with you, think about, what is the delta of any option when the market's at the strike, like on just a regular, Apple or whatever option, your delta is going to be 50, right?
Right.
So basically, there's a 50-50 probability that it'll expire, in the money. Okay. So knowing that, and knowing that a binary is the same thing, what is a delta when it expires out of the money? When an option expires out of the money, the delta is 0.
Right.
What is a delta when an option expires in the money? It is 100.
Right.
Okay. And so literally the formula for a binary is the Black-Scholes model for a call option, and then just basically extracting the delta from that price. So what does that mean? What that means, the number one thing that means for you is when you're looking at, choosing a binary and you're trying to figure out what strike can I count on, how does that bid offer move?
Yep.
I know that whether there is 5 minutes, 5 hours, or 5 days until expiration, that if the market hits the strike, that binary is basically be worth right at $50 with a little bid offer spread in there. And so it's like the most consistent number you can have an edge on. Now, obviously, if it goes a little bit past it, then like you sold it and it got down to 17,860. Like I think, and you showed your last screenshot.
Yep.
It was like right at $50, right?
Yeah, it was close. I missed the 17,860 screenshots. What happened? I had it right above at 20 points, and then I had it right below at 20 points.
So you had like a 50 to 60, and then like a 48 to 38. Right.
Yes.
So when it's right above it, you're getting right down there to $50. When it hit it, it's at $50. When a little bit below it, obviously it's a little bit less than $50. And that's always going to be the case. So it's really easy to know, regardless of time till expiration, what it's going to be like right at, right above, right below.
Sure.
And by using that knowledge, instead of just guessing that there's some random price movement that nobody can figure out the magic behind the binary formula, which is what I felt like when I first was reading it.
Okay. As to where that bid and offer gets calculated as it's 60 points or as it's 100 points out of the money, right?
Right, exactly. Yeah. So if I know, okay, once the market gets down to my strike or up to my strike, just whichever way I'm going,
Right.
then I can actually know that is why it's priced that way, and I can use that knowledge of I can count on this price, or I can count on a little bit better than 50 if it gets below it, or a little bit,
Sure.
better than 50 if it gets above it, depending on, like I said, which direction you're going. Then that gives me a massive edge. I don't feel like I'm randomly guessing at pricing.
Yeah.
What about the money management aspect, though? If you're going into do you know what I'm saying? Is that the binaries, because you are basically that yes/no decision. Do you know what I'm saying? Is that because
I guess it's just what you enter the trade with in terms of, because that is like, and that's why I think, Daryl, these 3-to-1s, because I think that it might not be priced correctly, at least not in my opinion. If I'm buying it, or if I'm selling it, I don't think it is, because I'm taking that trade. I'm not taking the other side. So I think the risk reward.
Yeah, the price is a reflection, like delta, as well as basically a quasi probability of expiring in the money.
Right.
So if you bought a contract that, if you sold a contract that had a $30 risk on it, okay?
Yep.
Then that means it has pretty much a 30% probability of expiring in the money.
Right.
So if you did 10 contracts, then 3 of them should expire in the money.
Right.
And 7 of them should expire out.
Right. No, that's what I was saying to my dad. You just got to make that determination. That's what that's what determines whether you win or lose. Do you decide whether that's going to happen more or less than what the market's saying?
Right.
Well, and I mean, they're insanely accurate.
Yeah.
Okay. I mean, I've literally done studies where I went through and just bought the exact same price, and I mean, probabilities almost like over and over and over again lined up.
Sure.
So the edge is definitely going to, now understand, that means expiring, not touching, not going past, but expiring.
Listen, for sure. Yeah.
Right.
So what you want to do is, maybe you're not going for that 50. It's just that's first, like the first concept is just getting where that number comes from. But like it went down, like how far down did the price go?
Well, we're going to go through the whole thing. Watch this.
We'll go through it. So 945. Where I'm at, my strike's 17,860, so I'm looking great, especially with the type of action where it's just moving so fast at the beginning of the market. We get 17,790, and I was talking to my dad during the break. I mean, this is where really I envisioned that I could have started taking money for where my mind was when I entered the trade. And, I entered it at about $25 I'm putting up, selling it at almost 75, so I'm getting 3-to-1.
And that's 3-to-1 in like 10 minutes, right?
Now this I could get 2-to-1 right now, though. That's where I could get 2-to-1 on my money, which is a great and I could get 2-to-1 before 10 o'clock in the morning, which is like a 25-minute trade.
Right.
So again, this is really where I should have taken the money. So
that was at 10:10 a.m.
Now again, though, with the binaries, it's like I had felt that really. I'm still, my only option here is to buy it back at 1750 if you're going to go to the bid or the offer. Now, I can go in the bid, but if I want to get executed immediately, it's 1750. Now, realistically, I didn't think the chances were worth that. I didn't want to take 1750. I thought at this point, really,
well, at that point, I
had 120 points to the upside that the Dow could move, and I still get my 100.
But you had 1,000. That profit loss, you were in the money by $1,000 at that point, right?
I was up.
But that's
this is for the binary. I was up 672. I mean, what's going on is I have 12 binaries.
Right.
So if they all expire in the money, it's $1,200.
Okay.
Each one's 100.
Right.
So right now I have 1,000 of that 1,200 that I could secure.
Right.
So I'm still though sacrificing $200.
Right.
Just to protect myself. Just to protect myself that the Dow goes up 120.
Right.
Now, that can happen though, and I knew that. So I'm sitting here being like, I should probably take this, but I really rather have the 1,200 versus the 1,000.
Right.
But as everything's emotion, of course.
Well, so the thing is, I mean, look at the movement you just had though in the last hour.
That's right. No, I agree.
You had a lot more than 100 points.
Exactly.
And you had to 415
right.
till the sucker
listen,
expires.
for sure, man, for sure. So, I knew that if I was going to stay in these, it was going to at least pop like 50, 70, 80 points. It wasn't going to be easy, for sure. But I thought I had 120. I thought I could withstand it. I didn't mind if it was going to get a little close, but I didn't think it was going to go back over it. So just as this is coming back the other way, I'm taking screenshots of this, being like, man, I hope this isn't like recording the worst move ever. So what happens as it goes up? It goes up. This is 10:45.
And we had quite a bounce.
This is 10:45. Yeah.
Yeah.
Now what happens? This is 10:47. 2 minutes.
What number you're at?
This is 2 minutes. So, now I'm at 17,860. Boom. We're at 17,830. Now the Dow is up 110 points from its low.
Right.
Just like you were saying, Daryl. And all of a sudden, now still I could get a 42. Maybe this is where it's going.
Now, this is one of the strategies you can use with this. As it goes down, it's going in your favor. Obviously, I'd still recommend if you have that many hours left till expiration, like 6, that you just take the money.
Listen, it's.
But as it's pulling back up, if it's down there and you're like, hey, I think it's going to stay down, right? But if it pulls back and it hits that strike or gets right on that strike, that would be a very good time to go, you know what, I'm going to go ahead and take my 1-to-1 or whatever.
It was close. No, I know, because it's really, then it's not doing what I'd expected. If it comes all the way back to 17,860, I didn't think it was actually going to touch the point.
Right.
Boom, 17,845. I mean, at this point, it's almost,
You're 15 points away.
Yeah.
Your blood's popping a little bit right now.
I said, when I didn't take my money, though, at 12 by 17 when the market, I really just had the conviction at that point where I was confident in the investment I made. And you can approach them differently where you're taking it. And some of them I do, Daryl, where, I'm looking at it and I'm ready to take, whether it's 10 minutes later.
Right.
And some of them I said, I think this is going to go down. I think this is that power on the move on the open. So I said, I'm at least going to let it play out longer. For the same deal, it's only 10:50 in the morning. If this spikes, I have 6 hours left on the same side on the downside.
And there she goes.
So there's 12 o'clock noon. We're going over.
Which is back in the money big time. And now, what time is that?
This is 1 o'clock. So it trickles back down, and I'm saying to myself at this point,
take your money.
Yeah, I'm saying, I just saw what happened, and it's approaching these same levels. This lower level, and you see this so often. You get these trading ranges, and
so
for
the level
Nadex,
that we're looking at right now, folks, on the bid and offer is 725 and 1275, and you sold it at like 73, right?
Right.
Okay.
So
the spread between that is the profit, folks.
You're right, and so right now, of a possible $1,200, that's my max money that I can get back. It's not probably right. I can get 1,050. So the other way of looking at that right now is I'm putting up 1,050 to make 150.
Right, which is insane.
And the market has to just pop 100 points in the last 3 hours of a trading day.
Right.
Which obviously we can see can happen. So I'm really close down. That's why I'm taking these, saying to myself, okay, I'm really close. And then what happens here is that it's 7 by 13. And somebody comes in, not a market maker, with just one contract, and he puts it out at an offer of 8. So the market's 7 by 8. So I take one contract off at 8. I get $92. And then what happens right there? Market becomes 1 by 575.
Wow.
And essentially, you'll see, I decide, at that point, I was basically risking $1,150 to make 50.
So you took it, right?
So I took it.
There you go.
And I'll go over
That's
it.
a beautiful thing.
Yeah.
Let's talk about that last statement when we get back.
Yeah.
Growling and prowling. Tom O'Brien, Daryl Martin, Tom O'Brien. You stay right there, folks. Coming right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Tom O'Brien, Darryl Martin. Tom O'Brien, appreciate you growling and prowling with us out here. We're going through a couple trades that Tom had on Wednesday, showing the bid offer, showing why you would close them out at this particular point. And right now we're looking at it's a dollar bid, $4.75 offered, right?
Yeah, and realistically, there's a dollar bid, but that's not a market maker bid even. That's so low. You can see that, I mean, a market maker's actually not even going to be in there buying that this is going to close over 17,860 at that price. That's what's happening.
It's too far out of the money.
It's too far. With the way the market's moving to, I'm sure with the force of the downside and being 135 points away, and this is at 2 hours to close. There's not a market maker bid out there, which makes sense.
Yeah, exactly. Right.
So what were you saying, Darryl, when I was closing that out with that type of money in play just for the final maybe 4 or 5 points of a binary?
Well, I think the point you made was, like, a lot of people go, man, look at how much more money I can make. I could make another $100 or $200 or whatever it is, right?
Right.
And in that case, like $50.
Yeah.
And they're like, hey, I want to make that last $50. But what they're not thinking, which I think you phrased it perfectly, was at this point I'm now risking $1,100 to make 50.
And that's crucial to understand that, folks.
It is.
It absolutely is.
Like, if you said, hey, will you risk $1,100 to make 50? People are like, no way.
You have to look at it. Would you make that trade right now? Would you?
Because it's your money.
Nobody would make that trade. I would never, ever initiate a trade where I would ever be putting up $11.50 to make $50 on a 100 Dow point move on the in the final 2 hours of the day. That's like...
So that I think that's like a perfect. It helps some people because I think a lot of people have this. People have a challenge with risk management, and then they have even more of a challenge with profit management because they barely ever get to work on it, right? And
No.
So when they get there, they're like, "Oh, I got the green, and I want more green." That greed comes in.
Yeah.
But basically, it's like, okay, well, we all have the greed, little bug we got to fight. But the best way to fight it is to look at the reality of okay, maybe I'm greedy and I want 50 more bucks, but am I willing to risk $1,000 more to make 50? And then all of a sudden, the fear bug will kick in and knock greed out of the way.
Right. And I knew, listen, if you'd asked me, I'd say there's no way that this is going to close above 17,860, of course.
Right.
But again, if you'd say, how confident are you? Confident enough to put up $1,100 to make 50?
No way.
I'd say you're crazy.
No.
Exactly.
Right. And, so walk us through the rest of this.
So what I told my dad is I had 12 binaries, and I took 4 of them when the offer was at $8, basically to get my investment back, because I knew I'm playing with fire being in this trade still, with the way it can move. I said I can't lose my investment. That would just be foolish. So I'll take 4 contracts off. I'll get my full investment back, and I have 8 contracts still going. And so that could be an $800 profit on about $360 investment still.
Right.
And then it basically ticked down a few more, and that's where I said, you can see with the numbers here, it tells you right away. Basically, with the 8 contracts left, if I'm getting out at 475, my max profit's 762. That's the money I'm taking in, and my max loss is 38. Sorry, So I'm securing my $762 for those 8 contracts, and I'm foregoing $38 of potential. I know. Now, what's awesome about this is that, so that's at 153. And, of course, now I have 2 spread trades on, too. And so that's the best part, is I'm not even closing this out in terms of my market, trade. I can still make a lot as it goes down. And then what happens? Of course, the market, 203, it starts to spike. I'm already happy. 341. Now, this is where I have spread trades on, so I still want the market to tank.
Right.
But, the deviant part of me says, God, it would be so cool if this actually spiked over 17,860 and that actually played off. And what happened? Look at the end of the day. I still would have gotten it, but if you told me the last part of the day was 40 points Dow up,
I know.
That's
amazing. Daryl, thanks so much, man. You have a great weekend, safe weekend. Look forward to seeing you next week.
All right.
Stay right there, folks. We appreciate you growling and prowling with us. Great job.
Thanks, man.
Great job, Tom.
Thanks.
Great trade. Stay right there, folks. Come right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.